What's going on, folks? Today we're gonna have a quick video about the ICT TGIF setup. So this setup is for a Friday reversal, only used for Fridays, the end of the week reversals. So let's not talk too much and hop into the PDFs. So what is the TGIF setup and how to use it? So as I said, it is only used for Fridays, and you can not use this setup if the high of the week or the low of the week is not formed on Friday. So keep this note. You cannot have the high or low of the week on Thursday and use this setup on Friday, or have the low or high of the week on Wednesday and use this setup on Friday. The high or low of the week has to be on Friday. It has to be. So what are we gonna go for in the first step? So first of all, gonna wait for the current candle to tap into a weekly point of interest. So the point of interest can be formed of FVGs, weekly fair value gaps, weekly volume imbalances, can be order blocks, can be OTE, optimal trade entry, can be anything. It even can be relevant, like important swings. It can be that too. So the point of interest can be formed any of these PD arrays that I just talked about and said now. So hopping into the next page, this is the fib retracement you're going to be using for this setup. So make sure you have these levels right here marked out in your fib retracement for the TGIF setup. You have to have these levels marked out. Is the 1, 0.2, 0.3, 0.4, and 0. So we're going to call the 0.2 as 20%, 0.3 as 30%, and 0.4 as 40%. Hopping into the next page, on the weekly time frame, make sure you're on the weekly time frame, you can't be on the daily. Step 2, as soon as Friday retests into a weekly array, a weekly PD array, or a point of interest, as we talked about. If the weekly candle is bullish, as you can see in this picture, you gotta mark the Fibonacci, we just showed the levels, from the low to the high of the weekly candle. From the low to the high. But if the weekly candle is bearish and you're looking for a Friday reversal to the upside, you gotta mark out the Fibonacci from high to low. Like instead of marking it from the low to the high, you're marking it from high to low. Alright? And noting, of course, again, if the high and low of the week is not forming on Friday, this setup is invalid. Don't even think about it. It's not even working once. Even though if it did, don't try it again. I just really want you to know this out. So, step 3, you're gonna be looking for bearish reversals on a bullish weekly candle or bullish reversals on a bearish weekly candle. So what are these levels gonna act as? You have your 20%, 0.2 is gonna act as target 1 right here. The 30% is gonna act at target 2. And the 40% is gonna finally act as your final target, 40%, target 3. So these are how you're going to be acting with those levels. Hopping into the next page, you got to immediately drop down after you marked out your weekly projections on Friday. You got to drop down to the 15-minute immediately. Drop down to the 15-minute while you're in the weekly point of interest. You shouldn't be before it and shouldn't be after it. You should be in the weekly point of interest. While being in it, you gotta search for a tap on the 15-minute in the point of interest, and you gotta search for any type of reversal sequences to form. Any type of reversal sequences. Can be an SMT, can be a structure shift, can be an inversion fair value gap, or even can be a change in state of delivery on the 15-minute. You can have such a thing, but not 100%. Because I'm going to show you later on the video how you can even catch the setup before you even see the reversal sequences on the 15-minute time frame. All right? So as you can see here, as soon as we tapped into this and get a retracement back, here's a formed low, our relevant low here, and how we got the upper side retracement and dropped lower, displacing under the previous structure. This is our market structure shift. So this is already our 15-minute time frame. But you can even get this on the 5-minute. So this setup, I'm willing to enter this setup with certain stop loss and targets on the 5-minute. All right. So as we talked about the projections, you're going to be targeting the 20%, 30%, and 40%. And I'm going to tell you each one how you're going to be acting with it throughout your trade. So on the 5-minute time frame, finally, as soon as you have same thing, tap into the weekly point of interest, drop lower here. Once you drop to the 5-minute, search for the most recent confirmation, again targeting the 20, 30, and the 40% levels, having your stop loss above previous high or PD array. What do we see here? Let's say back here is our Friday opening, hypothetically. We get an expansion to the upside, retesting at the weekly point of interest here. So our last formation of up close candle, the same formation we talked about in our previous recap video. The last formation of up close candles, it's going to be these two candles right here. Or you want to act it with a structure shift, as we saw in the 15-minute time frame. This is your relevant low. So you get a displacement downside, you get a market structure shift here from this relevant low to this down close candle. This is where the market shifted from bullish to bearish. We got this reversal sequence. What also do we have? A change in set of delivery. The last two up close candles. This is the last formation of up close candles formed in this phase of price. So a closure above the open of the formation of the up close candles. This gives us the change in set of delivery. And what are we exactly looking here for confirmation? We are looking at a fair value gap. So you got your reversal sequence, which is your market structure shift, and the change in set of delivery here. As you can see, the black line marked change in set of delivery. We got our reversal sequence. Now search for the most recent PD array targeting the projection levels. The most recent array we see here is this order block right here. You can even act with this change in set of delivery as an order block, and you got a fair value gap. This right here is our fair value gap. First presented gap in this phase of price, a bearish one. So how are we gonna act with those target levels, 20, 30, and 40%? How are we gonna be acting with them throughout our entries? So as soon as price approaches the 20%, we're going to be setting at break even. As soon as price approaches the 30%, we're going to be booking partials. And as soon as price hits our final target, the 40%, here is going to be our entry closure. Here's going to be our full target down here. So as an entry, how would this be looking? It would be looking something like that, even having an SMT, even repeating this right here, the tap into the weekly point of interest on a Friday. This would be the high of the week. All right, we noted this before. I want you to note it even now. And don't forget this. We cannot have the high of the week formed on Wednesdays or Thursdays. It has to be on a Friday. And what session can this occur on? Any session. Whether you're in Asia, London, or New York. But if you want to get it more as a high probable, I want to see Asia opening, the highs of Asia taken by London, and then New York giving us the distribution lower back to Asia lows. If I want to make it as a high probable one. But this right here The couple pages that I just showed you right now, this is enough for you. Everything you need for a TGIF setup. A setup that occurs once a week, and you can use it every single fucking week, and you will not miss it. If you actually see those type of phases of price and confirmation that I just showed you, there is no way you're losing with this setup. There is no way. I tested it out myself, and it gave me a 90% win rate on every single execution I took. So enough from the PDFs, and let me take you now to the actual charts to show you a couple examples. Alright folks, as you can see, we're on the weekly time frame on the euro dollar chart, and I'm just gonna give not more than one or two examples. I don't want to make it too long, too messy, too hard to understand. So noticing on the weekly chart right here, this is our previous week candle on the 13th of April. And just to show you guys on the 15-minute how we have the high of the week formed on Friday. So this 9 a.m. 15-minute candle is the high of the week right here. As you can see in the previous weeks also, we have no high higher than Friday high. So this is an actual high of the week. Going back to the weekly chart right here. So what did we talk about first? We gotta search where we are in the current dealing range. Do we have any point of interest? So the current dealing range is from this high to this low. So in this dealing range, what point of interest do we see? We see a lot. We see this order block right here. We see this propulsion block. So what is a propulsion block? The last block, the last candle that tapped into the previous order block and continued its phase of price. So this makes it a propulsion block, a valid propulsion. What also do we have? We have this imbalance right here. As you can see, even the bodies respected this. And marking out even our optimal trade entry, OTE, from the dealing range high to dealing range low, we are into the 3 levels of the OTE. So we can finally understand that we are in a weekly point of interest, as you can see. And I'm not taking you back in years of replay mode. This is the previous week's candle. So as soon as we find out, we're gonna mark out the order block and back and hop immediately to the 15-minute time frame. So this blue box, we gotta get rid of it. All right, so here was our weekly order block, which price retraced into. What also do we need to see on the 15-minute time frame to confirm a reversal? Right, a reversal sequence. So right here, as you can see, this is your last fair value gap. So after this retracement lower, after the 9 a.m. high on Friday, I want to see this get inverse. So this is not a fair value gap, this is an inversion fair value gap right here. So as soon as we displaced it lower, right here, you see this down close candle. As soon as I saw this closing under this gap, I immediately go where? To the 5-minute time frame. We don't want to take so long on this. On the 5-minute, what do we see? So we don't even need the 15-minute in this case, because look at this beautiful distribution to the downside. What do we see here? First of all, we said we gotta look for a reversal sequence, which is based on a structure shift or a change in state of delivery. So here I see both. This right here, these 3 up close candles are the last formation of up close candles before this reversal. So the open of this formation, the open of the first candle, is our change in set of delivery after closing under it. So we closed under it. This right here makes it a change in set of delivery. After closing under it, so as you can see, price gave us a beautiful closure on this down close candle. After that, what do we need to see? Yes, the most recent PD array we find. So after this change in set of delivery, we can use this order block right here, or you can even use this fair value gap right here. So our entry, what would it look like? It would look like that. Stops on the previous short-term high. Where should we be targeting? Back to the 1 week. Right here. Bring up the TGIF projections. So we said in a bullish weekly candle, we're gonna mark out the projections from the low to the high, right? So these right here are our target projections. Go back to the 5-minute, and right here, this is our target 1, this our target 2, this is our final target. And as you see, the final target aligning with those sell-side liquidity down here. So beautiful alignment for our target down here, a 1 to 5 hour trade before market closure. So how better do you need this setup to get? This repeats every week. If you see it, if you see the framework, take it. It is a real high probable trade. I love it, I use it, and I'm gonna keep on using it. A really helpful setup, and it's easy. So we're just going on the 1 week. So how did we start? The TGIF setup. So explaining the TGIF setup in the shortest way possible. Weekly candle, retests into a weekly point of interest. High of the week has to be formed on Friday. So high of the week here on Friday. Immediately, as soon as we found that, we dropped to the 5-minute. On a Friday, on a beautiful Friday, search for a reversal sequence. We had a change in set of delivery. We had a structure shift between this short-term low and this down close candle. I sometimes even use the standard deviation projections for the target. So marking it out from the spotty high down to the spotty low. Got the change in set of delivery, this gap, enter off it, stop above the short-term high, targeting the 20, 30, and 40% of the weekly candle right here. So those are our weekly candle projections, the 20%, 30%, and 40%. And notice how on EU price smacked all three of them. Right here, price hit our first target, a small retracement to the upside, distribution. Hit our second target, a small distribution into this gap again, into this order block, a beautiful distribution back down, hit our last target, another retracement into this gap, and another distribution. And we're out of this. A 1 to 5 hour beautiful TGIF setup you could have taken on EU this Friday. And you don't need more than this. Not making it complicated. I'm not rebranding shit. I'm not calling myself an inventor of something. I'm just a student of the market, showing what reality is. This is gonna be it for today. I hope this was useful and everything was explained in the right way, in an understandable way, and see you on the next video. Peace.